Are you ready?
Ready.
All right, let's go. Kevin here, top 1 financial advisor and best-selling author. We are here to talk about the stock market. Warren Buffett is the world's most legendary investor, and he is currently worth over $100 billion. And in today's video, I'm going to break down his entire investing strategy in 5 minutes or less. So let's go ahead and start the clock. All right, let's go. Warren Buffett is what is called a value investor. What that means is he assesses the cost of a company and tries to get it for a discount. For example, let's say I'm looking at a MacBook. MacBook is $1,000. It's not a value at $1,000, but it is a value at $500. That's where I would want to buy this item. That is how he approaches the stock market. His entire process is actually laid out in The Intelligent Investor. We have talked about this book several times before, but it's thick. Let's just go ahead and summarize it. So the first thing that he does is assess things like a business. He views the stock market as a business, and that is extremely important because a lot of investors, especially when I was new, I just look at it and say, oh, this chart is up, it made X percent, I want some of that, and hopefully it will do that for me. For example, you can look at a company like Discover Financial, Discover card, and say, look, oh, it's up 20%, I'm just going to buy it. And it has been up 20% in the last 6 months. It's not looking at it like a business though. You're just looking at it as a stock. What do you actually need to know, right? Who is running the company? How does it compare to its competitors, American Express and Visa? Did you know that Discover Financial has increased its free cash flow about 9% over the last 10 years? What does that mean? It means that, let's say your salary, right? This is the money you have at the end of the day that's actually in your hand if you own the entire business. Imagine having a salary that increased 9% every single year. That's a good business to own, right? So if I'm looking at like a business, I'm going to ask those questions, see how much money they actually have, see how they're run, who the CEO is, and how it compares to the overall landscape. That is what's going to give me a more informed decision, and it's going to have me to ask certain questions and go and get those answers. I may have to go get those answers from a financial report, the earnings report. I may have to go and read what the CEO is saying about the company and what they think about the entire economy. If I'm not looking at it like a business, I'm not going to ask those questions. I'm not going to have that information. The second thing that Warren Buffett does is he holds for long term, plain and simple. He says if you're not planning to own a stock for 10 years, you don't even need to spend 10 minutes on it. Just go and do something else, because he's a long-term investor, and that is extremely important because the longer you hold a stock, the higher your odds are of actually being positive. If you hold a stock for 5 years or more, you have a greater than 89% chance that that stock is going to be positive. And that's just because you allow yourself more margin for error, but also the entire stock market over time does rise. A 7 to 10% average return since like 1929. Okay, that includes the Great Depression and everything in between. That's not every year, it's an average. But if you're holding a stock for 5 years or less, you're at 50%. I don't know about you, I want to shoot for the largest percent chance that I can be positive, right, and make a return. So holding for long term is one of his biggest tenets. The last thing that you want to do is not lose money. Now, yes, his whole thing is to never lose money, and here's one of the reasons why. You lose 50%, and here's a quiz for you. How much money do you think you need to make? You're going to need to make 100% just to break back even. So what does Warren Buffett do, and how does he avoid this, or at least reduce this? He has what's called a margin of safety. That means that he assesses the value of a company and tries to get it for just a bit less. Let's go back to the MacBook example. $1,000 is the price, $500 is the value. However, $400 is probably my margin of safety in case I'm wrong, in case that company is not really worth $500. I'm trying to get it for just a bit less. The reason why that's important is because, let's say you're buying a stock and it comes down, you're trying to get it at face value at $1,000 a share, and you buy it right then. You don't assess the value, you don't have a margin of safety, right? And you get it right then. The minute that stock drops just $1, just 1%, you're already behind the 8 ball and you've already lost money. So what he does is have that margin of safety to give himself some space and let that company come to him at the price that he is looking for. That is when he hops in, and that is when he buys it. This is one of the reasons why he does another quote that says that, be fearful when others are greedy and greedy when others are fearful. So when the stock market fell in 2022, he was a major buyer. In fact, we've done several videos on the stocks that he was buying, because he said, look, my margin of safety price was here all along. I'm going to wait till the stock market to come to me, and that is when he bought. So those are the tenets that he invests in, or his strategy rather, that we've covered in what I hope to be 5 minutes. Oh, I got 29 seconds left. Look at that. So here's some of the things that you might want to do. I've covered his entire investing strategy and some of the things that he does. How does he find out that margin safety price? He does what's called discounted cash flows. I've covered all of that inside our members only, and I've actually covered several value investing videos on the channel. So you want to make sure to check those out to learn more about Warren Buffett and what he does and how he has made so much money. All right, that is it for me. My watch is ringing, and we did it. We did it. We did it. I'll talk to y'all tomorrow.